a senior executive at Union Investment, one of Germany's largest asset management firms, has raised concerns about the reserve structures of major stablecoins, comparing them to speculative hedge funds. At the London Digital Money Summit 2026, Christoph Haack, head of digital assets and tokenization at Union Investment, argued that the reserve portfolios backing Tether's USDT and Circle's USDC are structured more like investment funds than simple cash equivalents. This comparison signals growing scrutiny of stablecoins as supposedly safe assets in institutional portfolios. Haack's remarks focus on the evolving composition of stablecoin reserves. He highlighted that Tether, in particular, has been increasing its exposure to volatile assets such as gold and Bitcoin, moving away from a purely cash-backed model. This shift introduces market risk into what is supposed to be a stable and reliable asset. While many companies use stablecoins as a straightforward, cash-like payment method, the underlying reserve structure introduces volatility that could destabilize financial operations. The March 2023 depegging of USDC, when its value fell by approximately 13% following the collapse of Silicon Valley Bank, where Circle held a portion. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Of its reserves, illustrates the real-world risks. Haack warned that such events could be catastrophic for institutions relying on stablecoins for daily operations or treasury management. This incident exposed how interconnected stablecoins are with broader financial systems and how a single point of failure can ripple through markets. According to Haack, the fundamental credibility of stablecoins depends on their ability to function as cash equivalents. However, the pursuit of profit through reserve management, by including assets that carry market volatility, undermines that trust. He stated that the reserve structures of USDT and USDC are effectively similar to those of speculative hedge funds, which are designed to generate returns rather than preserve capital with zero risk. This comparison raises questions about the true stability and reliability of stablecoins as they scale. The concerns raised by Haack are not theoretical. They reflect a growing trend in the crypto ecosystem, where stablecoins are being treated more like investment vehicles than simple digital cash. This shift could have significant implications for institutional adoption, as organizations may hesitate to use stablecoins for critical financial functions if they are not truly stable. Union Investment's executive is not alone in expressing these concerns. As stablecoins grow in size and influence, regulatory scrutiny is also increasing. The comparison to speculative hedge funds highlights a potential regulatory blind spot. Stablecoins are often treated as cash, but their reserve structures may be more complex and risky than assumed. The uncertainty surrounding stablecoin reserves is a key issue for the broader crypto market. If stablecoins are not truly stable, they could undermine confidence in the entire crypto ecosystem. This is particularly concerning for institutional investors. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Who rely on stablecoins for liquidity, settlement, and treasury management. The lack of transparency and standardization in reserve structures could lead to further instability and regulatory pushback. The next signal to watch is whether stablecoin issuers respond to these concerns by increasing transparency or shifting back to fully cash-backed models. If stablecoins fail to address these credibility issues, they could face a decline in institutional adoption and regulatory acceptance. This would have broader implications for the crypto market, as stablecoins are a critical component of many financial systems and use cases.